Hey, crypto fanatics and curious newcomers. Welcome back to Boni's Life, the channel where we dive deep into the digital rabbit hole and try to make sense of the beautiful chaos that is cryptocurrency. I'm your host, Boni, and today, buckle up because we're going on a time traveling adventure through a two-parts evolution of crypto adoption. Today, let's jump into our first part. That's right. We're talking about how crypto went from a niche dream whispered about in obscure internet forums by folks wearing tinfoil hats, allegedly, to a global phenomenon that has institutions sweating, regulators scratching their heads, and your cousin suddenly thinking he's Warren Buffett because he bought some Dogecoin at the right time. We'll uncover the secret history, meet the key players, some brilliant, some, memorable, laugh at some hilariously bad predictions. Because who doesn't love a good I told you so or a spectacular faceplant? And celebrate the epic wins that show just how resilient this whole crypto thing is. We'll link it all to the nitty-gritty of fundamental and technical analysis where we can, and even rate the reliability of some of these wild claims. Now, before we jump in, the usual Boni's Life disclaimer. I'm your crypto-obsessed guide, not your financial advisor. This space is volatile like a caffeinated squirrel on a trampoline, so always do your own research before yeeting your life savings into anything. Capiche? Good! Let's get this crypto coaster rolling. The primordial soup, before Bitcoin was cool, pre-2009. Alright, let's rewind the clock, way back. Before Bitcoin was a household name, before your uncle started asking you about NFTs at Thanksgiving, imagine a world without Bitcoin. Dark, wasn't it? A bit like trying to stream a 4K movie on dial-up. The struggle was real, but the dream of digital cash, private and peer-to-peer, wasn't born with Bitcoin. Oh no, visionaries were tinkering away in the digital shadows for decades. The OG cypherpunks, think of guys like David Chaum with his eCash back in the 80s and 90s. He was talking cryptographic electronic money and blind signatures when the rest of us were still figuring out how to program a VCR. DigiCash, his company, even had deals with some banks. It didn't quite take off for mass adoption. Maybe the world just wasn't ready for that level of cool, or perhaps the internet infrastructure was still in its awkward teenage phase. But the seeds, they were sown. The intellectual architects. Then you had brilliant minds like Wade Dye proposing B-Money in 1998, an anonymous distributed electronic cash system. Fun fact, the smallest unit of Ether, the Way, is named after him. And Nick Szabo with BitGold, another precursor that explored concepts like proof of work. These weren't just idle thoughts, they were the intellectual bedrock upon which Bitcoin would be built. And then, bam, the 2008 global financial crisis. Trust in traditional banks and financial institutions, let's just say it took a nosedive bigger than a lead balloon. People were angry, disillusioned, and suddenly the idea of a decentralized currency not controlled by any government or bank started to sound a lot less like a tinfoil hat theory and a lot more like a done good idea. This crisis was a key catalyst, a sort of fertilizer for the crypto seed that was about to sprout. Genesis, let there be Bitcoin, 2009 to 2013. And sprout it did. On October 31st, 2008, a mysterious entity known only as Satoshi Nakamoto, still don't know who they are, one person, a group, an alien, my man is on a highly intelligent cat, published a white paper, Bitcoin, a peer-to-peer electronic cash system. 9 pages that would change the world. Then, on January 3rd, 2009, the Genesis block the very first block in the Bitcoin blockchain, was mined. And get this, embedded in that block was a message. The Times, March 1st, 2009, Chancellor on brink of second bailout for banks. Talk about a statement. Satoshi wasn't just building tech. They were making a point. The first believers. Who are these early Bitcoiners? A motley crew of cryptographers, cypherpunks, libertarians, and tech geeks who saw the potential when most of the world was still asking, "Bit what now?" Bitcoin Pizza Day, May 22nd, 2010, are a legendary tale. Laszlo Hanyecz paid 10,000 BTC for 2 pizzas. At today's prices, well, let's just say those would be some very expensive pizzas. But it was the first documented real-world Bitcoin transaction. From digital curiosity to dinner. Imagine explaining Bitcoin back then. So it's like internet money, but there's no bank, and you mine it with computers. And one day it might be worth more than your house, or nothing at all. Yeah, you'd get some blank stares. Altcoins emerge 2011 onwards. Bitcoin was the OG, but soon creative minds started thinking, hey, we can tweak this. Namecoin tried a decentralized DNS. Litecoin, created by Charlie Lee, was like Bitcoin's faster silver cousin, using a different algorithm. Peercoin even started experimenting with proof of stake. The crypto family was growing. The Mt. Gox saga begins, founded 2010. Problems brewing. Remember this name, folks. Mt. Gox, originally a Magic, the Gathering online exchange. Seriously, it became the dominant Bitcoin exchange. And like any good drama, it was full of foreshadowing for future crypto face plans. More on that train wreck later. So the early days were a mix of groundbreaking innovation, passionate communities, and the first hints that this crypto journey wouldn't always be smooth sailing. It was raw, it was new, and it was undeniably exciting. The Ethereum era and the ICO Frenzy, smart contracts and get rich quick, 2014 to 2018. If Bitcoin was the quiet, mysterious pioneer, then Ethereum, bursting onto the scene around 2014 to 2015, was the flamboyant, multi-talented rock star. Conceived by the brilliant and often turtlenecked Vitalik Buterin, Ethereum wasn't just about digital cash. Oh no, it introduced the world to smart contracts. Think of it this way. If Bitcoin is digital gold, Ethereum is like digital Lego. Suddenly, you could build anything on the blockchain. Decentralized applications, dApps, new kinds of tokens, entire new financial systems. The possibilities seemed endless. The DAO hack, 2016. But with great power comes great responsibility. And occasionally, great big screw-ups. The DAO, a decentralized autonomous organization built on Ethereum, was a hugely ambitious project. It raised a ton of money and then got hacked for a massive chunk of it due to a vulnerability in its code. This led to a super controversial decision, a hard fork of Ethereum to recover the funds. This split the community and created Ethereum ETH and Ethereum Classic ETC. It was a dramatic lesson. Code is law is a great soundbite, but reality can be a bit more negotiated. It was like the crypto version of a messy divorce with two Ethereums fighting over who got to keep the cool blockchain. ICO Mania, 2017. Hold on to your hats because 2017 was the year of the initial coin offering. Suddenly, everyone had a revolutionary idea for a new crypto project. All you needed was a white paper, sometimes seemingly written on a napkin 5 minutes before launch, a flashy website, and a promise to change the world. Billions of dollars poured into these ICOs. Fortunes were made overnight. Lambos were allegedly bought. Remember some of those ICOs? Dental coin, revolutionizing dentistry with the blockchain. Useless Ethereum token. At least they were honest. It was the Wild West, folks, and the snake oil salesmen were out in force. The great bull run of late 2017, early 2018. All this hype culminated in a massive bull run. Bitcoin rocketed towards $20,000. Your grandma was asking about Ripple. Everyone who'd bought $10 of Bitcoin in 2012 was suddenly a financial guru on Facebook. It was a glorious, manic, unsustainable frenzy. Crypto winter 2018. And then, crash. The bubble burst. Prices plummeted. The Lambo dealerships got a lot quieter. This was the infamous crypto winter. Many ICO projects vanished into thin air, taking investor money with them. It was a harsh reality check. The get-rich-quick crowd got a rude awakening and the true builders hunkered down. The crypto winter of 2018. So cold, even the penguins were shivering. It was a time for quiet reflection and maybe a bit of panic selling. This period was a whirlwind, incredible innovation with Ethereum followed by the irrational exuberance and inevitable hangover of the ICO boom. It taught the crypto world some hard lessons about hype, sustainability, and the importance of actual utility over empty promises. Predictions, crystal balls, and epic fails. Crypto predictions. If there's one thing the crypto world loves more than acronyms, it's making wild, often outlandish predictions about future prices. Some are insightful, some are hopeful, and some are just comedy gold. Let's dive into the prediction hall of fame and shame. The future is uncertain, they say. In crypto, it's uncertain, highly caffeinated, and possibly being manipulated by a whale named Chad. So, take all predictions with a mountain of salt. They're hilariously, spectacularly wrong. 1. John McAfee's Ahem wager 2017 for 2020. The late, great, and undeniably eccentric John McAfee predicted Bitcoin would hit $500,000 by 2020, then upped it to $1 million. The kicker? He famously promised to, and I quote, eat his own dick on national television if he was wrong. The reality? End of 2020, Bitcoin was hovering around a respectable $29,000. No televised anatomical feasts occurred. McAfee later called it a ruse to onboard new users. Sir John, talk about high stakes. That's one way to get attention. Though, I think we're all glad that particular prediction didn't require a follow-through. Reliability rating, 0. Entertainment rating, off the charts. 2. Calvin Ayre. Bitcoin to 0, 2018 for 2019. Calvin Ayre, a big proponent of Bitcoin SV Satoshi's vision, boldly declared that the original Bitcoin, BTC, would plummet to 0 in 2019 because apparently it had no utility. End of 2019, Bitcoin was chilling above $7,000. Not quite 0, Calvin. Not even close. 0? Ouch. That's like predicting the internet will be a fad. Sometimes the crystal ball is just a snow globe full of wishful thinking. Reliability, negative. Schadenfreude level, high. 3. Anthony Pomp. Pompliano's 2019 moonshot portfolio, predicted in 2017. The Cole Pomp, a well-known crypto bull, tweeted some very optimistic 2019 targets. BTC to $100,000, ETH to $3,000, LTC to $2,500, and XRP to $10. The reality, end of 2019. Bitcoin approximately $7,200. Ethereum approximately $130. Litecoin approximately $40. XRP approximately $0.19. A slight overshoot, you might say. Bless his optimistic heart. That's the kind of enthusiasm you see when the bull is really charging. Unfortunately, that bull ran into a brick wall named reality. Reliability, low, but A+ for effort. The bold and visionary timelines are tricky. First, Hal Finney's 10 million Bitcoin 2009 long-term musings. The call. Way back in 2009, Hal Finney, one of Bitcoin's earliest pioneers, did a thought experiment. If Bitcoin became the global payment system, its value could align with total worldwide household wealth, implying a mind-boggling $10 million to $22 million per coin. The context. This wasn't a short-term price target, but a philosophical exploration of Bitcoin's ultimate potential. From one of the OGs. That's not just bullish, that's galaxy brain bullish. We're not there yet, obviously, but it shows the sheer scale of ambition some early adopters had. Reliability for 2025? Low. Food for thought? Absolutely. 2. Fidelity's Jarian Timmer. $1 billion per BTC by 2038 to 2040. The call. The director of global macro at Fidelity, a TradFi giant, has suggested Bitcoin could reach $1 billion per coin by 2038 to 2040, based on adoption models and comparisons to gold. The context: this is a serious long-term projection from a major financial institution. $1 billion per coin. Let that sink in. When a behemoth like Fidelity starts throwing around numbers like that, even if it's decades away, you pay attention. Reliability for the short term? Not applicable, but it shows the institutional mindset is shifting. The directionally correct, even if timelines slipped. First, Bernstein analysts, Bitcoin to $200,000 by 2025. The call. More recently, analysts at Bernstein are eyeing $200,000 for Bitcoin by 2025, citing the impact of spot ETFs and institutional inflows. The context? This is a TradFi firm looking at current market drivers. Okay, this one is still in play. $200,000 by 2025. Given the ETF madness and big money sniffing around, it doesn't sound completely bonkers. We'll be watching this one closely. Reliability? Medium high for the bullish sentiment, TBD on the exact number and date. 2. Cathie Wood, ARK Invest, Bitcoin to $1 million plus by 2030. The call. Cathie Wood, a major tech investor and Bitcoin bull, has consistently predicted Bitcoin will reach $1 million or even $1.5 million per coin by 2030. The context, based on Bitcoin's increasing role in institutional portfolios as a hedge against inflation and its growing adoption in emerging markets. Queen Cathie, she's not afraid of a bold call. $1 million a coin by 2030. That would certainly make for an interesting decade. Her firm does a lot of research, so it's not just plucked from thin air. Reliability, medium for the long-term bullish thesis. The exact number is of course speculative. So what have we learned? Predicting crypto prices is like trying to nail Jell-O to a wall. Messy and rarely successful in the specifics, but it sure is entertaining. And sometimes, amidst the noise, there are some genuinely insightful long-term visions. This is the end of our part 1, folks. catch us next time with our second and final episode. So, what are your thoughts on the evolution of crypto? What were your aha moments or your biggest face palms? Drop your comments below. I love hearing from you. Don't forget to like this video if you learned something or at least chuckled a bit. Subscribe for more crypto adventures and hit that notification bell so you don't miss our next exploration into the digital frontier. Until next time, stay curious, stay safe, and may your bags be ever so slightly greener than yesterday. This is Boni, signing off from Boni's Life.